you're a real estate investor and you want to know a little bit more information on how to qualify for a DSCR loan, in this video, I'll be going over everything you need to know to get the process started. Welcome back to the channel. If you're a real estate investor who's looking to grow their portfolio, then you're in the right place. In this video, we'll be going over everything you need to know to get started on the DSCR loan. Let's get into it. First off, I'm going to explain what DSCR means. It's debt service coverage ratio. What that basically means is we're covering the debt with rental income, and the debt is the mortgage amount. For a quick example, let's say the mortgage amount was $1,000. As long as that rent comes up to $1,000, you'll have a 1 ratio, meaning that the $1,000 rent will be divided by the mortgage amount. So 1,000 divided by 1,000, you'll get 1. The higher the ratio, the better the rate. So if you had $1,250 on the rental side, then you get a 1.25 ratio. Some lenders are willing to go under that to a 0.75 ratio, which means you're actually taking a loss. For an example, that would be $750 in rent. So now that we know the calculation is dividing the rent by the mortgage amount, let's get into the next one. Credit score. Majority of lenders require you to have a 680 credit score or greater. There are a few lenders that are willing to go below 680, below 640. However, the rates are going to be higher, but at the same time, you're going to get the deal done. Typically, with lower credit scores on purchases, you'll have to place a higher down payment. So if you had a 640 credit score, some lenders may require you to place a 25% down on a single family versus having a 700 credit score and you're allowed to put as low as 15% down. Now let's get into the funds needed for a purchase. So you're looking at the down payment. The down payment for single families are 15% to 20%, depending on the lender we go with, depending on your score, multiple factors, but the lowest down payment is 15%. When you get to the 2 to 4 unit, the lowest down payment will be 20%. Once you go above that 4 unit, typically 25%. Then there's also closing costs, similar to a regular traditional loan. I always tell my clients that closing costs are estimated to be right around 5%, more or less, depending on the deal. There's also reserves. Reserves are basically an amount that covers the monthly mortgage for the property. Lenders typically want to see 3 to 6 months in your bank account. If you're looking at properties around 250,000 or under, typically when you get to the 500,000 range, they might want to see a little bit more reserves. The higher the loan amount, they might want to see more reserves. So you'll have the closing costs, the down payment, and then the reserve. Now let's talk about the rate and term refinance. LTVs will play an important part on your interest rate. The lower the LTV, the less the rate will be. The higher the LTV, the higher the rate. For example, if you had a property that was worth $200,000 and you did a rate and term refinance of 80%, you typically will have a higher rate. And 80% is typically the highest you'll be able to do a rate and term refinance at. For cash out refinances, majority of lenders will do a 75% max cash out. There is one lender I know of that's willing to do an 80% LTV, but keep in mind that the rates will be higher when you have higher LTVs. Now let's go over the documentation needed for a submission. Starting off, you'll have to fill out an application. Next, you'll have to submit some documents. Some of the documents are your ID. You'll have to submit your proof of primary residence. So this could be a utility bill or it could be a mortgage statement, basically just showing the mailing address and the subject property to be the same, showing as your primary residence with your name on it. Lenders typically want to see a 2-year history of where you lived. You will not be able to live in any of these properties. These are investment purposes only. If you are purchasing the property, some of the documents they'll need is the purchase agreement. We'll need a homeowner's quote. And if you're purchasing in an LLC, we will need your LLC documents, copy of the EIN document, the articles of organization, and the operating agreement. Keep in mind the operating agreement needs to show that you own majority of the LLC with some of the lenders we use. On the purchase side, you'll also need 2 most recent bank statements. Some lenders will require just 1. An important thing to know about bank statements is that if you have any large transfers, they'll question where that came from and they'll need sources for it. So make sure that you have the funds in the bank account for at least 2 months. If the property that you're purchasing has a lease, then you'll have to provide a lease agreement. It is very important to do your research to find out what the current market rent is on the property so that when the appraisal comes back, you already know what the rent was going to be. Because rent obviously plays a huge importance in the DSCR ratio. One very important thing to keep in mind, when the appraiser goes out, they will do a market analysis on the rent and the lender will go with the lower of either the appraisal rent or the lease rent. So if the appraisal comes back at $1,000 as market rent and your lease says $900, they will go with the $900 when calculating the ratio. If the property is vacant that you're purchasing, they'll go based off of the appraisal rent. For the refinance side, you'll have to have it rented. If it isn't rented, you'll have to provide an explanation on why it isn't rented. For example, if you just completed the renovation, that's a good example, or if you're in between tenants. Now, once we have all the documents and the application filled out, we'll work on pricing the loan with you and we'll submit the deal. Once you submit the deal, then the lender will conditionally approve it. You will get a conditional approval letter. And once you satisfy all the conditions on the conditional approval and the appraisal comes in and everything passes, then you will get a clear to close. I hope you've enjoyed this video going over a little bit more information on the DSCR loan. I'll be making a lot more videos about DSCR loans and many other investment loans to help you grow your portfolio. So make sure you subscribe and hit that notification bell so you don't miss out.